Tomorrow's.
Friday.
Oh yeah, I'll be out of town. That's why I didn't get invited.
Where you going?
Vacation.
Are you?
Yeah.
Where to?
South Padre. I go after the 4th because it's cheaper.
Are you say Michael's place?
No, he's in Port. Oh yeah, he is in South Padre. No. We're staying at a house. There's a whole bunch of us.
Okay.
But I go the week after the 4th of July because I'm cheap.
No, you're smart. Why do you want to go through all this people?
So this is the money segment. Definitely, we should talk about Mr. Powell and his 86% probability of raising the rate again.
And how people shouldn't be going on vacation right now and saving their money?
Yes. That's exactly what he said.
I'm just playing.
Yes, so and then we will just go from there. On that rates, okay.
Okay.
I mean that's a long time we can talk about Mr. Powell.
Yep, go for it.
Okay. Hello, let's try that again. Hello, Austin, Texas. You're listening to the home team with Troy and Wyatt. We hope you enjoy what you heard here today. If you have any questions, please reach out to me at loansfromtroy.com or give me a call at 855-299-HOME. And as always, this segment is brought to you by Security National Mortgage, where we turn houses into homes by financing
your
American dream. All right.
Hey, so I have some questions.
Oh boy, and it's the time because
we're in the title business on this side, right?
okay.
So,
And the title company you work for is
Tech Security Title.
Texas Security Title. I like that name.
So,
Yeah.
it's tough out there, right? I mean, it's tough for mortgage professionals. It's tough for real estate agents because we were talking about earlier some of the educational things, right? People don't realize that it's still a good time to get into a home, especially for a first-time home buyer. And the big thing that is, that you see, and everyone kind of stops right there reading, like, I'm done, is the interest rate. And right now it's what, in sevens?
The prime interest rate is 5.25.
Okay.
However, mortgage interest rates are in the 7s,
Yeah.
and right now, unfortunately, they're pushing higher.
So they're going higher.
They're pushing higher. They're in the low 7s. And they're pushing higher.
So you were talking earlier before break. We have some kind of indications. So, we have some people up in Congress talking.
Mm-hmm.
What are they doing right now?
So Jerome Powell, he's the head of the Fed chair.
Okay.
He has decided there's an 86% probability that he will raise rates again.
So Jerome obviously doesn't do this by himself. He has people.
He has a panel.
Mm-hmm. But it's his decision at the end of the day.
I mean, he's the chair. I'm assuming they would. I mean, I've never been inside one of those, but
Right.
They're all very smart people. But my opinion is that they are following trailing data, right?
Mm-hmm.
So the data they get right before they go in is all the inflationary numbers and stuff like that, and the job reports and all that, and then they go in. Well, the job reports, is 2 weeks old. It's data from 2 weeks ago.
Right.
So,
Which we know in the industry is too late.
yeah, because and unfortunately, they also revised in January the JOLTS, the job report. So they revised it. So they're basing it year over year off of numbers that aren't apples to apples year over year, right? And so.
And they just met Wednesday again, right?
Yes, and they're going to meet at the end of July. And the probability is to go from 5.25. Now they don't know. It's 5.5 is like 80-something%. 5 to go to 5.75 is in like the 35%. That he could bump this another 50 basis points.
Mm-hmm.
So this harkens me back to 1999 when Mr. Greenspan was in office. And he said, we're there, but I just feel we need to just go one more tick higher, right? And so he moved it up another quarter. And when he did that, it was the proverbial straw on the economy's back. And it crushed the economy for a good period of time. It was one of the 9-month recessions, one of the longer ones. And I feel that's where we're at now. They went so fast that it wasn't anything that changes economically so fast, it has ripple effects. And the problem is that you do it so fast, the ripples are still getting out to the edge of the pond, right? If you drop 10 rocks in there, all one after the other, by the time the 10th ripple hits, or the first ripple hits the edge of the wall, the 10th ripple's right behind it,
Right.
and that's kind of what he did. So it's like, we just, a couple months ago, we had bank failures. We had some other banks struggling. There's a lot of things. We had some banks bought out. I think that the mortgage industry, there are a lot of independent mortgage bankers that were holding on because the prediction was the second half of 2023 rates would start coming down. So that's now. So these people they've been holding on by the skin of their teeth, running negative numbers, losing money, but knowing they just had to make it till the midpoint of the year. Rates would drop a little bit, refinances would pick up, it would pull them out of their slump. Well, now there's an 86% chance that ain't going to happen. And so it does appear that mortgage banks are about to be sold, gobbled up, or closed. It does appear that we're about to have about the numbers I'm hearing are 10 to 30%
Of mortgage banks
of independent mortgage banks are going to go. Now, and you're like, well, wouldn't we know this? No, because most mortgage banks are privately owned businesses,
Right.
and they're not publicly traded. So people don't know what's really going on behind the scenes. There are some big mortgage banks that have sold off entire states of their production in the last 30 days because they need the money to get them through.
Right.
And so that's what I think is about to happen with the mortgage industry, which unfortunately, being
In the mortgage industry.
well, but being a capitalist in general kind of concept and, free market society, this is what happens in in an economy. An economy gets too big, people create, when inefficient companies can maintain business, it's not good for the economy.
But when you give out free money, doesn't that kind of hurt?
That's
It seems like that might be on purpose. So
Well,
this might be for. I'm just saying.
No, it's not.
I'm not trying to get political.
No,
but
it's not on purpose. It's just that as the mortgage companies got so big, they just kind of grew and they didn't care. They were just hiring people and doing all this stuff, and
Right.
they didn't grow efficiently in the right way. Well, then when it contracted, the strongest will survive. It's just like a natural. If you watch those nature shows, I was watching them last night. They were talking about like the manta ray. Right, stingray. The female stingray makes the males chase her for hours and hours, and I mean they have to do all this crazy stuff. And she waits till there's one left. She waits for the strongest, so that way her offspring have the best chances to move. It's the same way with the mortgage industry.
Sure.
It's the same way with the mortgage industry. Is that in times like this, only the strongest ones will make it to the next stage, which becomes a better industry in the future.
Sure.
So, and that's just part of it.
Oh, that makes sense.
And it's painful. It's very painful.
Yeah, well, it is painful, and the thing is, we see a lot of friends and family members, that are in the industry that are hurting and suffering, because we came from a refi boom.
Yeah.
So some people left their jobs and got into this industry because it was so fruitful.
Yeah.
Right. And so it's tough. It is a tough time for some people.
Yeah.
And now we're saying this. People are like, well, y'all are just trying to sell us to get loans because y'all are suffering. Right? Oh, I get it now. So this is a sales job to try to turn us into customers. But that's not the truth.
No, I'm just telling you what's going on in the industry. It does appear that there's going to be one or two more hikes. Do I agree with them? Absolutely not. I think the work has already been done, and now we have to sit and wait for all the ripples to get to the edge of the pond.
Well,
that's what I feel.
So, I was sitting here reading while you were talking a little bit, and there's arguments. He's not just saying that he's going to do this. There's some arguments. The feds are arguing up there about whether to hike him or not.
Yeah.
But it seems like he's going to win the argument.
Yes. Yeah. He has straight up said that he feels we need to be at 5.25, which we are, and we need to be there for considerable time. The problem is that the jobs numbers didn't fall like he thought they were. However, inflation is coming down.
So when you say job numbers, you're saying unemployment?
Unemployment numbers.
So they want unemployment.
They want. Oh yeah, they want. Yes, that means the economy.
Human suffering makes the economy better.
No,
I'm just trying to.
Human suffering stalls the economy,
Right.
which then stalls inflation.
Okay.
The only way to curb inflation is to slow the economy.
It's just a rough time.
Yeah.
I don't mean to put set negativity on it, but I mean that's what it is.
Yeah.
So they're wanting people to lose their job for the economy to change over.
Yeah.
Essentially.
Yeah.
Right.
Yeah.
Right.
Yeah. It's think of it like a New Year's party. You go out on Friday night, New Year's, and you have a good time partaking in the drink of the evening and all that stuff, and it's great. To at 3 o'clock, you go to bed, then you wake up. Ooh, you don't feel so good, do you?
No,
This is kind of that part. Everybody just woke up from 2020, 2021, and now I don't feel so good, and that's where we're at.
Right.
And so, like I said, I think that the jobs report is inaccurate now, or not apples to apples, because if you look out there, the good jobs, they're not. A lot of people have been laid off already. A lot of companies have reduced staff, things like that. So I'm just confused about the jobs report. It doesn't match what I'm seeing in real time.
But yet, there's people still going on vacation. 4th of July, and it was the busiest 4th of July they've seen in a long time.
Mm-hmm.
So you see all these statistics.
Yep, and
the feds they get to argue and say, well, did y'all not see the reports on how many people traveled over the 4th of July?
Hence, yeah, and that's why there's an 86% probability that he will raise rates again, because
if we just save our money and quit going to the gas tank, basically, we could end it. Is what you're saying?
Yes, and the issue is, and honestly, the issue is that people are living on credit right now. I mean, savings is fallen.
Have they?
Yeah, credit debt has soared, but yet the economy is still roaring. It makes no sense.
Well, everybody's thinking it's going to end soon.
Right.
They do.
Obviously, they're not listening to this.
It's the water and the wine, not me. Them. If they will quit spending and going on vacation, but I'm going to go on vacation. Yeah. But if they will quit it, then it'll end, right? It's so human, right?
Yeah. I'm sorry.
Yeah.
It's about to really upset half our listeners.
Well, I'm just saying. I mean, I'm just trying to put it.
Totally.
That's the truth, right? I mean, it's a tough one.
Yeah, and it is what it is. And obviously, if people can't afford to do that, then the feds have not done their job.
Well, and that's the thing is if you're going on vacation, don't do it on credit. Right. Yeah. If you don't have the cash, don't spend it right now. Don't go on credit.
Yes.
Be smart about your money. This is not a time, especially with interest rates going up, to be borrowing money.
Yeah,
as far as with credit cards.
We've been talking about this. You live on your cash, and if you do, then right now it doesn't hurt you.
Right.
And you'll be in a better position when the economy comes out of it.
Right.
Because we are there. They had a 2% gross domestic product last quarter. They're expecting the second quarter to be around 1.5 or 1. So it does appear that everything is happening the way we want it to happen. It's just not happening as fast as we want it to happen.
Boy, I wish it would.
Absolutely.
Yeah.
Everyone, you've been listening to the Home Team with Troy and Wyatt. We hope you've enjoyed what you've heard so far. If you have any questions about anything we've said today, please reach out to me at loansfromtroy.com or give us a call at 855-299-HOME. And as always, this segment is brought to you by Security National Mortgage, where we turn houses into homes by financing
your
American dream. And we'll see you in just a second.